Hi there, traders. This is Brad Gilbert for Thursday, the 8th of February. Now, let's just look at where the action is today, right? Just have a look at the equity markets, and this is something we sort of focus on quite a lot, just to see what's happening, as in market condition-wise sentiment. Now, during the Asian session, we've got a bit of a risk-off day. Is that rolling into the currencies? Absolutely not, right? Equities down, dollar down. That's a little bit unusual. So that would give you the heads up and go, you know what? Things are not sort of behaving as they should, right? And if you ever look at the charts, right, this has been a bit of one of those funny weeks where we don't have any massive data. The dollar after the non-farm payrolls screamed to the top side. As I was saying yesterday, there's no real support levels on the dollar index for a bit. It's starting to drift, right? And we're seeing that that sort of dollar move. It's a bit mixed, right? Because we've got dollar Swiss sort of just banging top side. Dollar yen sort of just cruising around the trend line, dollar drifting lower here, right? So we've got like a couple of different scenarios on the dollar straight away. So if you're trading and looking at the markets and you think, you know what, I'm going to have a bit of a crack today, well, just be aware there's no uniform action on the dollar, right? You have a look at the dollar block, as they call them, euro, sterling, Aussie, Kiwi. They are behaving a little bit more rationally, right? They're going up, right? So euro up, sterling up, Aussie's picking us all up off the floor, even though we had weak Chinese data, and so is the Kiwi. So to me, like the dollar, trying to get a sort of handle on the dollar index is the easiest one because it has, you know, euro is 58% of the basket. It's drifting lower, euro up. That's what I can see at the moment, right? Dollar Swiss up, euro up, just isn't a good match. Something's wrong there. And dollar yen, it's just sort of cruising wherever. And the loonie, it looks like oil is, well, I don't know if it's having to, well, it is sort of correlating a bit. So that's where we are. Now, where's like, what can I get out of today? Well, just looking at that, you want to be cautious, right? Going into the day. Trading is about building capital. And more importantly, the biggest part about that is not losing money on days when things aren't really kicking into gear. Now, we did have some Chinese inflation numbers. If anything, the consensus minus 0.5, minus 0.8 year on year. That's a bit of an alarm bell. You'd think that would hit the Aussie and Kiwi. It didn't have any impact. If anything, Aussie yen squeezed a little bit higher. And you look through the rest of the day, we've got some central bank pundits speaking from the Fed, Bank of England, ECB Lane, Barkin, RBA Bullock, etc. Right? So you got a few central bankers talking. Just to be aware of that. If anything, the weekly jobless claims number. Now, the market's been a bit starved of US numbers. So I'd be watching this very closely, especially just after the non-farm payrolls. If we see like a negative outcome here, right? So more jobless claims, well, that would sort of suggest that, you know, maybe the non-farm payrolls was just seasonal and this is a better indication and we might see the dollar correct from here. So to me today, the US initial jobless claims number, and this is like a second tier number, is the one that we need to be looking for, right? So what we're looking for is a number above 220, right? Ideally, 300K means there's people turning up and claiming jobless benefits, and that's not good, right? And it goes against the overall move we had on the non-farm payrolls, and you got to see the dollar come off on that, right? And euro rally as would sterling and the other pairs. Now, on the other side of that, let's just cover both sides of the equation, because if we did see a number like 100, right, and the consensus is 220, well, that's a good number, and you're going to see the dollar start to cruise into gear. Anyway, it all revolves around the initial jobless claims. That's all we've got to hang our hat on. If you're looking and you're trading and you've got positions, well, just have a look at that if the dollar's part of the instrument you're trading, because that could influence a bit of momentum around that time. All right. And that's all she wrote today, guys. There's not much in it. Don't throw big cash around. If you want to trade, this is the time to be trading smaller trade sizes and just taking a little bit of cash out of the market if you see the opportunity. Things should hot up as we get into Europe, but we are starting to see we've got a short squeeze on here in euro, sterling, Aussie, Kiwi. Like I can see euro up at 108.60. That looks like where all the pain is, right? Everyone's short euro, long dollars. There's trouble there. The jobless claims could be the catalyst for the move. All right, guys, have a good one. Cheerio.